Good morning, ladies and gentlemen. This is Jane from Dividend Stock Talk, where we talk about dividend stocks and investing in dividend stocks for weekly or monthly cash flow. Today, it is 3/22, which is March 22nd. It is 9:11 a.m. The market's going to open up in about, 29, 28, 20 some odd minutes. Anyway, let's get down to the nitty-gritty. We're working with we're working with a bunch of different accounts, trying to figure out what is the best way to earn a consistent, safe income, investing specifically in dividend stocks. Now, why do I say dividend stocks specifically? Well, dividend stocks have been paying out a portion of their profits to their investors every year. Now, stock market, I don't know if you know this, but the stock market's been around for over 400 years. Got an original start back in the 1590s. Some businessmen got together and they wanted to create a huge company. I mean, they wanted to do something grandiose. So in order to do that, in order to come up with all the money they needed, they actually went door to door selling certificates, stock certificates, and they promised their investors a portion of the profits. Now, this company was very successful. They actually averaged 18% per year for 198 years. Wow, that's crazy. Anyway, that leads us to where we are today. Now, granted, the stock market has changed quite a bit from its original situation. It only had one company at first. But as soon as a lot of companies saw the success, then everyone started jumping on board. So now we have in the U.S., we have over 7,000 companies trading on a daily basis. Almost every country or every continent has its own securities market where companies trade paper to find out what's best for their investors and keeping business rolling. And that's just a part of e-commerce. Economy. I don't know how exactly you want to put it, but there's nothing really wrong with owning a portion or a part of a company. So we're going to get to where we are today. Now, as you notice, I only have one position today, and that's with Dillards. Why is that? Because last week we did a bunch of positions. Now, we basically broke even last week because we did 4 positions. 2 of them made money and 2 of them didn't. However, one of them that didn't make money ended up buying us Dillards at $80. So let's quickly show you this. Right click on here, come back to view trades, and it says right there, 5,000 shares at $80 a share. So what am I going to do with 5,000 shares? I have a bunch of things I can do with 5,000 shares. Let's quickly take a look at what Dillards is doing right now. Let's go standard chart. Okay, so the standard chart for Dillards, they started out the year close to the low of the year, 46. Okay, went up about a month and a half before it quickly dropped like a tank to find the low of the year. From there, they swooped up to find a high, which was a quick, rapid ascent from 46 all the way up to 83. So that's almost doubling in price in 2 months. Can you imagine that? Dillards from May 12th at 45.60 to July, what is that? July 28th at 83.44. What a great return for those who may have gotten in at that point. But that's not what we do. We just buy, capture the dividend, get out. Or with the options is we buy and sell options, spread options to allow us to collect money regardless of what direction it goes in. All right, I'm going to show you a little bit more of that in a little bit later. So we got in. When did we get in? Come on. Oh, look at that. Back to view trades. All right, we got in on the 17th. All right, 3/17. Today is the 22nd. 17th. Let's open this up a little bit. 17th. So that was like last week. Well, that was last Saturday. So we've only had, 3 trading days since then. Monday, Tuesday, Wednesday. Now, Wednesday, they hit a high of, what was that, 82, 89? I could have got rid of it then for a nice profit. However, that's not what I'm doing. I don't watch the stock market on a continuous basis. I do it less than 10 minutes a day. I find out what my account's doing, and then I make adjustments to it. I don't expect you to be able to do that within, 5 or 10 minutes. You need a little bit of practice. You need to get good at what you're doing. So I bought it at 80. So I have a couple of options. I could sell it now for a $3,700 profit, but that's not really going to help my bottom line any. So what I ended up doing is I ended up selling an option against it. So I already own it at 80. So the best thing I figured out to do for it is to, is to sell the $80 weekly option. What does that mean? That means every week this company, Dillards, has an option to buy or sell stocks. So they expire every week. So currently, the market price right now is right at $80.74. So we're 74 cents into the money. Okay, so that means I could sell it right now and make my 84 cents, 5,000 shares. It's a nice little profit. Or what I could do is, if you look at this right here, here's the strike price at $80. The date is the 23rd of March, 2018, which is tomorrow. I can sell this for $1.50. Now, I have 5,000 shares, which is 50 contracts. So 50 contracts at $1.50 a share comes to a maximum profit of $7,500. Now, think about that just for a little bit. Just think about it for a little bit. You buy it for $80. You sell it for $80. And you still make a profit of $7,500. That sounds pretty nice to me. Anyway, so I already sent that in yesterday, and it's already pending. So it's, here it goes, right here. I did this time placed. That was yesterday, or last night. I placed this this sell order. Sell to open 50 contracts of DDS, which is Dillards. The 23rd, it expires the 23rd of March, 2018. The strike price is 80. Now remember, come back here. Look at my trade. Okay, the 17th, Dillards stock, 5,000 shares. Price is $80. Okay, right now it's at $80.74. So my profit and loss to date, if I sold it right now, or when the market opens, that would be a $3,700 profit. Now, a lot of you might think, hey, that's great. Let's take the $3,700 and run. Why do that? Dillard's got their dividend coming up in next week. So you got a lot of people that are going to want to buy Dillard's just to get the dividend. And look at the chart. The chart doesn't look all that bad. I mean, it came up, it made a high right here of 88.50. Yeah, it's only at 87. I don't really care about that. What I care about is the weekly consistent cash flow. And I'm perfectly happy with making 1% per week. 1% per week on a $100,000 account is $1,000 a week for less than 10 minutes of work per day, which I think is absolutely fascinating. All right, so that's the order. The market's going to open up in less than, 10 minutes? In 10 minutes, and we're going to hopefully get that filled. If not, if it comes down a little bit, heck, I'd even sell it for $1 a share. So $1 a share, it's still $5,000 return, which is still better than the $3,700. Remember, if I sold it now at the price at $80.74, I'd only make $3,700. All right? But if I sell the option, regardless of whatever I sell the option for, that is going to be profit. Plus, I get to sell it for the exact amount of money I paid for it last week. So, all that being said, that's what we're looking at. For those of you who want to find out what else is going on, this is what we're looking at for those of you who have money available. So Comcast, now I was looking at some of these last night. Comcast, which is usually a great company. Let's quickly CMCSA. See, Comcast is at an all-time low. Well, low for this year. Started out the year at 37. Kind of like all over the place, but not really, because it looks like it's all over the place. But it's between 34 and 44. That's only a $10 difference. So it's not a lot of difference. It just looks that way because the numbers aren't that spread out. All right, so it's at a yearly low of $34. Now, is it something you really want to get into? I don't know. For the past 2 months, she's been going down. She got 4 down days in a row. Now, Comcast has got its dividend coming up on April 3rd, which is 2 weeks from today. So usually, this thing usually goes up right around dividend time. But this time around, where we are at this quarter, let's quickly take a look at the seasonality chart, and I'll tell you why. All right, here's the seasonality chart. The blue represents this year. The red represents 10 years worth of data. So on average, this is what the stock usually does every year. Yeah, if we bought it now, it's going to go up, coming into the summer months before she peaks in July and August. But look at where it is right now for the next couple of weeks. Okay, for the next couple of days, over the last 10-year period, this thing has a tendency to go down a little bit before we get to the end of March, beginning of April, and then she goes up a little bit and then sideways. So we may pass on this one for this week, but next week it may be a candidate, depending on where she finds the bottom. Because Comcast, you may like the company, you may not like the company. Whether you like it or not is totally irrelevant. I mean, look at this. You got 7 out of 8 trading days going down. This thing's got to find a bottom pretty soon because Comcast is basically everywhere. They're not going anywhere. They got a monopoly on a huge portion of the country. Everybody loves their TV, so nobody wants to give up their TV, so they're not going to give up their cable. And if nobody's challenging Comcast, Comcast is just going to dominate the market. So is it a good play? Yeah, but not right today. Not until it finds the bottom, which can be in the next couple of days, maybe Monday or Tuesday. I don't know. But all that being said, let's look at Wednesday. Is that's Cisco? Yeah, Cisco. 33-cent dividend coming out in 2 weeks. All right, let's quickly take a look at Cisco. CSCO. Now, Cisco, they started out the year at 34. Took them a while to find the bottom right there at 30. From 30, she jumps all the way up to 46. That's not a huge jump. It looks like a huge jump. I mean, look at the chart. The chart looks good. But it goes from 30 to 46. That's not that huge. That's about a 50% move. Okay? Not like the Comcast. Comcast almost had a 100% move. But anyway, back to Cisco. This is what Cisco looks like. They get the dividend coming up in 10 days. However, it looks pretty, but let's take a look at what seasonality looks like. Because seasonality, it gives you year upon year upon year of data. Now, as you can see, that the dividend stock basically looks flat. It looks like it's going nowhere. Okay, so it means you're going to have to find a trade. Because Cisco, don't get me wrong, huge company, huge. They pay out weekly dividend. They have weekly options. They pay out monthly dividends. And I believe Cisco may even be a dividend king. I'm not 100% sure. But I know they are a dividend aristocrat, which means they've been increasing their payments for a minimum of 25 years. It means every year you get more and more money. I like that idea. Remember, absolute worst case scenario, you get stuck with one of these companies. If the stock drops and you own it, you get to collect that 33-cent dividend every 90 days. So you get 1,000 shares. You multiply that. That's like what, $330 every quarter for 1,000 shares. It's not a lot, but cash flow is what we're looking for. Okay, so Cisco, in the next couple of weeks, is basically going sideways. So what does that mean? That means we can do a trade on Cisco, CSCO. She's at 44 now, and we want to look at spread, because a vertical spread gives me basically. I'm going to show you real quick. So let's go back to the regular chart so you can see where we are. Okay, this is where we are right now. I mean, don't get me wrong. I mean, past information is great, so you know where she's been the past year. Okay, the low of the year was, like I said before, $30.30 some odd cents, and right now the high is what is that, 46? So we want to stay somewhere in between. So for the last 30 to 60 days, this is what she looks like. Doesn't look that bad. The low here is 37, and the high here is 46. So it's like a $9 spread. So this is where we are now. $44. Cisco's got the dividend coming up in 2 weeks. Now, if you checked out my software, you notice that Cisco's one of the good companies, one you want to jump into. I probably should get into that, but I don't really have much time to do that. But let me quickly show you. It's at 44.30 right now. So if we look at 43.35, oh, that's a good one right there. 43.50. Basically, what that means, as long as the stock, it means you'd be buying one call, the 43, and you'd be selling the 43.50. Now, doesn't kind of make sense, does it? But let me explain why. You're buying the 43 call, which gives you the right to buy Cisco at 43. Then you're also selling the obligation for someone to buy it from you at 43.50. So what does that mean? That means basically, as long as the stock stays above $43.50 by 4 p.m. tomorrow afternoon, you make the profit. Okay, so how much profit are you going to make? Right now, the current price for this is 40 cents. It doesn't sound like a lot, but let me quickly show you a move that I would make. I can't do it today because all my money's tied up in that position that I have. Let's quickly look at 50 contracts, because I like doing 50 because it makes it worth my while, so to speak. I hit confirm and send. It doesn't actually send it out until I actually hit the button. Okay, so to do 50 contracts, the maximum profit I'm going to make is $500. Not a lot of money. However, maximum loss I have is $2,000. And how much is it going to cost me to make this trade? It's going to cost me $2,075. Okay? So for $2,075, the most money I can make off this is $500. You see where I'm going with this? So, 2,000, that's almost like 2,100. 2,100 bucks out. Maximum I'm going to make is 500. That is almost 24% return for 2 days. 2 days, 24% return. Okay? What has to happen? If the stock goes up, you make your 24%. If the stock goes absolutely nowhere, you make your 24%. If the stock goes down, it can go down as low as 43.40. That is your break-even point. Okay, so at 43.39, you start losing money. Anything above 43.40 is profit. Now, what are the odds of it going down? Don't get me wrong, the odds are there. However, let's look at some of the facts. Facts number one is Cisco's a big, yep, hey, check it out, market opened, yay. Okay, Cisco is a big company, not going anywhere. And did you see what just happened? The market opened, and Cisco opened at 43.71. Whoa. Okay, but look, quickly jumping up, 43.80. So as long as she closes at 43.50 or above, you're going to make that 24% return. Plain and simple. That's why I like the spread. You get a lot of things going for you. Cisco's a big company, has weekly options. Excuse me. The dividend is coming out in 2 weeks. Okay, the software, if you don't if you don't have access to the software, go to the 10minutetrader.com and gain access. Or below in this video, there should be a link to allow you to become a member, to allow you to access the software, to put it in and show you how well this thing performs on a historic basis. Okay. But anyway, that's a trade that I would make. And let me see where my position is. We're talking. Oh no, sorry, I can't do that one because I don't have enough money. All right, righty. Ooh, 139. So let's change this to get the market value, because I don't mind selling it for the market value. All right, where are we? 150, 135. Confirm. Since I'll make $6,700. Okay, $6,700 better. Check it out. I just made $6,700. That was quick. That was awesome. All right, anyway. Oh, yuck. Okay, so there's Dillards. I sold a 50 contracts in the money for almost $1.40. And this is where we are at the moment. Okay. Let's get back to where we were. Okay, so let's go back and take a look at a few more. So that was Cisco. So like I said, as long as Cisco stays above, had you put it in before the market opened, as long as Cisco stays above 43.50, you're going to make a 24% return. Now, as the markets open, all these numbers are going to change, and it's going to kind of mess up my my tutorial, so to speak. So we're going to catch you later on today after the market closes. That all being said, I'm going to quickly jump over and see if I have any questions. No questions. All right, so all that being said, this is James from Dividend Stock Talk. You guys have a great day, and that, my friends, what I just showed you is a great trade. Cisco, even if you own Cisco, quick, before I check out, let's quickly take a look at what Cisco would pay us for okay, if we ended up getting Cisco at 43.50, because the only way we get stuck with Cisco is if it dips below 43.50, then you have the option to buy it at 43. Okay, so let's go and put Cisco in there. CSCO. All right, that would help. Okay, Cisco at 43.50 is 81 cents a share. Okay, so if you buy it at 43, oh, wait a minute. No, we ended up buying it at 43 if we get stuck with it. Okay, so if it dips below 43.50, means you'll end up buying it at 43. Okay, so 5,000 shares at 43, and you have the option of selling for the exact same price you paid and gaining $1.16. That number is going to change consistently. Okay? So if we bought it today at 43, we can sell it at $1.16 per share, $1.17 per share. Okay, so and you wouldn't find that out until the close of business tomorrow. Okay, so if you put the order in, the one I showed you, where is it? The vertical. Okay, right there, the 43 and a half, 38 cents. You make a couple more pennies. Any contract you do, even if you do just 10 contracts. 10 contracts is going to cost you, what, $400? And you can make 120. That's more than 25%. You see that? It's more than 25% return for 2 days, as long as it stays above 43.50. And if it doesn't, if it goes below 43.50, you end up buying it at 43, and then you can turn around and sell the option for, where were we again? Back to single, the 43 at $1.19. Make all your money back. Booyah. All right, so anyway, that's my suggestion for the day. I am signing out, so you guys have a great day, and I will catch you tomorrow.